Okay, today I'm going to show you how to make a lot of money if this market goes into a decline phase. All right, it's starting to show some signs that it may be ready to roll over and start going down sooner rather than later. So it's time to get your portfolio in order, get ready for a decline phase if it's to come. We want to be prepared, take maximum advantage of it, and make a lot of money from it. All right, I'm going to show you a lot of details today, so let's get started. Today I'm going to start with the DIA ETF. What the DIA is it's a ETF of the Dow Jones Industrial Average Index. All right, and the reason I chose this one is very specifically it's conservative as far as indexes go, in my opinion. All right, and the reason I'm choosing a conservative ETF is because, in my opinion, that is the play right now. You should be starting to get conservative if you haven't done so already. Okay, what I do, if you've been following my channel, as I trade the phases. And today I'm going to show you exactly how to trade in each phase and what you should be looking to do as the market cycle continues through its rotation, right? And the phase, real quick review, is it goes up, right? That's the cycle. It goes into a bull market, it goes into an expansion phase, and then it comes into a decline or a crash phase. It consolidates and then it does the same thing over. It recovers, goes back into expansion, and then continues the same cycle, which would be a downward movement in the near term future, right? Now, why are we saying today we need to get conservative? Well, if you draw this trend line, which I've done here on the Dow Jones, let me clean up my chart a little bit here. Right, I've drawn this trend line over the tops of the chart, and you see that it's went a little bit beyond the upper trend line of the movement of the index. And to me, that says, okay, it's not just beyond expansion mode, it's lofty now. It's overpriced. It's been, too much over exuberance, too much confidence coming into the market. People are starting to get greedy and they've overbought it. And now the cycle down is imminent. We just don't know exactly when. Well, today the market is start showing some signs of potential cracking where it might start moving down sooner rather than later. And you want to make sure you're prepared, right? I've been preparing already. I've been preparing. Anybody's been watching the videos, all right? And if you want the free guide, you can get that at the top of the description. But for today, I'm going to show you what to do right now, okay? And what you would do right now is buy a conservative play. So what does that mean? That means if you own stocks right now in your portfolio, in my opinion, you should be transitioning out of those or preparing yourself to say, hey, I'm going to hold these for the long haul. And when the market comes down, I'm going to be perfectly happy with that. And I'm going to accept the fact that it's going to come down and I'm going to have to just wait and ride it back up. Okay, the scary part with that is not all stocks come back. Okay, a lot of good stocks, I've seen them go down during market corrections or during down cycles. And the market comes back every time, right? You can look at history of the Dow Jones Industrial Average and the S&P 500. It always recovers, but not every stock recovers when the market recovers. At this point in time where you know that there's a high likelihood of the market coming down, what you want to do is get something that is conservative, cautious, low beta. And low beta is what the Dow Jones Industrial ETF is. If you go put it in Yahoo Finance, right, and just type in the DIA up here, and I've done it already, you look at the beta down here is 0.89. So what that means is if the overall market goes down 1%, this is going to go down about 0.89% of that. So it's going to go down, we'll just say 9/10%. So if the market crashes 10% and you're holding DIA, it's only going to crash 9. Now some people say, well, that's horrible. Why would I want to hold something that's going to go down 9% when the market goes down 10? I want something that's not going to go down at all. Well, there's only one thing that doesn't go down at all, and that's called cash, okay? So what some people will do is just sell out at some point here. They'll use a certain moving average and say, okay, when it crosses below this 30-day moving average right here, this blue line, I'm going to go to cash and wait for it to recoil itself and come back up, and then I'll buy it up again. All right, and that's a perfectly good strategy. Is it the best strategy? I don't know, but it's a good strategy. So right now, here's your options, in my opinion. You would buy the DIA and hold it and wait for this down move. And when this down move comes, then you would transition into something else out of it. I'll show you how to do that a little bit on in the video here, but let's just get through this phase first, okay? But right now, you want to hold something that's going to go down at least at the speed of the market or slower. That's a pretty smart play, in my opinion, right? Now, you might want to do some cash, or some people just hold SPY. I have a lot of SPY, right? And I'm not getting out of it at this point. I'm holding it. And what I'm going to do with it at this point is start selling covered calls. That's another strategy. We're going to get to that one in a minute. But right now, you want to position yourself where you're in a low beta product of some sort. Get out of the high beta stocks. If you own Amazon or something like that, or Nvidia, something that can crash hard, you want to get out of it and get to a low beta stock that's not going to move that far down when the market crashes. Now, you are taking a risk, right? The market could continue to go up. And if it does, then you're going to move that upward move. You're going to miss that upward movement, or you're just going to make it, but you're going to make it with the market. You're not going to beat the market. But at the same time, right now it's time to be cautious, not to be aggressive. That's the point I'm trying to make here. So buy cautious investment vehicles right now, not high flying aggressive vehicles. Don't be greedy, all right? Every time people get greedy in the stock market, that's when they lose money. All right, be smart right now and say, hey, I want to be conservative. I don't want to be greedy. I want to do what's smart. And the smart is I want to stay in the market. So the market goes up, you make money. The market goes down, I'm going to show you how to take advantage of that and make even more money. But right now, you just want to protect yourself from that down move. So SPY and cash are two very good ways to do that, okay? Now, what else could you do from here? Well, what you're going to do from here is say, gee, I have my positions and I'm going to sit and wait while this crashes. I can generate some more income by selling cover calls, okay? So let's just say you own the SPY, like I own the SPY right now. I have a large position in the SPY, and I don't want to sell it and go to cash, and I don't want to trade it for anything because I want to hold it and get long-term tax benefits on it. So what can I do to get long-term benefits tax-wise and also make income? Well, I'm going to sell cover calls. Let's say I own the SPY. It's right here. I'm going to sell cover calls up here, right? I'm going to do about a 12 delta right now. And why would I do something up here? Because I anticipate the market's going to come down. And as the market comes down, I might roll these down and keep the income coming in. So if the market keeps dropping down to here, right, I can roll these calls down and keep bringing in the income as the market goes down. And then when the market gets further to the bottom, well, what might someone do then? Well, gee, it could be several months or several weeks. I take that back. It could be several weeks for this downward move to play out, right? Or it could take the whole year. I mean, 2022, the market went down for the entire year. If you watch my VIX video, you could have played the VIX spikes and made a lot of money. Again, if you want to follow my strategy, there's a free guide at the top of the description. You can download that, or I have a full course with all the details for you to trade exactly what I do. But if you don't want to, you can use your own vehicle. If you already own some stocks that you don't want to get rid of because you want to hold long term, or you've held them long term, you can continue to hold them and sell cover calls while this thing continues to go down, and continue to just push your calls down and keep making money. Then if it recovers, you can start moving them back up and continue making money off of it, right, until the market recovers. But that would be kind of the least profitable mechanism you could do, right? What would be better to me is say, hey, I'm going to sell cover calls, and I'm going to sell cover calls until it gets down to here, right? And I'm going to keep tracking the market. And when the market gets to a certain point, maybe down to here, I'm going to watch for its time to transition back into what I call recovery mode, right? Now it's going to have gone through the expansion. I've held my positions that I wanted to hold. I've sold the positions that were high risk and high beta. And I went to cash on some of it, and some I just transferred into low beta, such as the DIA or the SPY. Then I sold cover calls on that as the market moved down and kept some income coming in. And now the market is done moving down, right? What are you going to do then? Well, again, I have a guide. You can download it, or you can get my full course and follow that, or you can do this right here. I'm going to tell you what to do, okay? You're going to transition from the SPY or the DIA or whatever other positions you were holding long term. At that point, you want to transition down here into what is called a high beta or leveraged product. Okay, and I do this based on the VIX. I let the VIX tell me when I'm going to transition. What's another technique you can do down here? Well, you can transition to a high beta product such as TQQ, right? TQQ is the triple index, right? Now, if the market was to drop down to here, and you were to load up on the TQQ, right, when the market recovered, you would recover much faster than the market. So let's just say you started with, we'll just say 25,000 right here, and it crashed, and now you went from 25,000 to 15,000, right? And now you switched your QQQ or your DIA to TQQQ, and then the market comes back up to here, right? So you switched them right here, then the market moves back up to here. Well, now your 25 grand is likely going to be about 40 grand. Even though you got right back to even, you're way ahead of even now because you use leverage on the way up. That makes sense? And I'm not doing exact math here. I'm just giving you an example. Okay, and why did it do that? Because you leverage at the most opportune time of the market. That's where a lot of people just miss trading, right? They just miss the whole market. They're busy trying to make a cover call trade or a swing trade or time the market. And there's no reason to do any of that. I mean, the market is just sitting here waiting for you to come in and take advantage. And if you'll watch any financial channel, you'll see them say, yeah, the bargain hunters swept in and bought up the market on the dip, right? And that's what smart investors do. They wait for that dip. Now, I'm not saying you just sit here and cash and wait. Some people do. I got some cash waiting. You probably have some too. You may, it's up to you. You might just have some positions waiting. But when it comes down to here, you can rotate your position into a high leverage product and ride it back up, okay? So let's just give you another example. I have the SPY right now. I'm holding a lot of SPY shares for my protection here, right? I've been selling calls against them. I've been making money against them. Now, cover calls, just to be very clear, you don't want to buy a stock right now up here and sell a cover call against it. That would be silly. You only want to be selling cover calls against the stocks that you already own or the ETFs you already own, and you want to hold them long term. And now you see an opportunity to make income out of them as the market moves down. You can keep selling cover calls without any risk of getting called out. Because you don't want to get called out from your cover calls. That's just when you cap your upside, it's just self-defeating, right? You want to make money from your cover calls, not lose capital appreciation because you sold a call. You want it to be a benefit, not a negative. So sell the call, the market's going down, you're keeping the money, you're protecting yourself in this position, and now when my position comes down, I'm able to get out of it at a lower cost basis, perhaps, right? So now I paid less tax because I got out down here, and now I'm going to switch to something else, maybe something like SSO, which is 2 times the SPY. So now the market came down here. I sold my SPY, took a little bit of loss off of my gain there, so it gives me a tax benefit. I pay less taxes on that now because I waited till it came back down here to get out of it. A lot of people have a hard time grasping that, right? But I'm not just going to get out and say I took a loss. I'm going to get out and I'm going to transition into the SSO. So when it goes up twice as fast. Again, I have a free guide you can follow. It gives you the map, or you can get the whole course, gives you all the details on how to make these trades. Okay, it's very important if you want to make a lot of money through the entire cycle, right? The last decline was here back in April 2025. Hopefully you rotated out down here and got some high leverage stuff. You rode it up to here, you got out of your high leverage, you went back into some normal plays or some of your mix of 80% index ETFs, 20% stocks, and started buying stocks. Or you could have done your wheel strategies if you wanted. Some people like to do cash secured puts and use that as a vehicle as the market climbs, or do some covered calls. I personally don't do any of that at this stage of the game. Right here, I'm just buying stocks and holding them because I know when they go up, I make more money than if I sell options against them, and I don't have to do all that work. But a lot of you have a lot of sophisticated option strategies. I'm going to start putting some more of those on here too in the near future that you can start learning. But if you want to do your wheel, you can do your wheel. You want to do puts, you can do puts. You can do cover calls. You can just do buy and hold. Whatever you want to do works during this type of market, right? Everybody makes money in a bull market. It doesn't matter what strategy you're running. It's going up. Everybody's going up. Some people are making a lot of money. Some people are making a little bit. Some people are making everything in between. But we're all making money when this happens. But what happens now is the easy money is made. The skills start to become a requirement, right? You have to have stock market reading skills at this point, or this easy money starts to become easy losses, right? And that's where a lot of people get discouraged in the market. They watch everything go up in a way. They made a lot of money, and now it's starting to move down. They don't know what to do. I'm telling you what to do right now. You may not believe me. I'm just some guy on YouTube, but I'm telling you, I've been doing this a long time. This is what I do. It works. You can do this too. Get my free guide, get my course, follow it if you want, or just listen to me right now. Rotate into something low beta, right? Start preparing for a down move. If the market continues to go up, don't be mad. Just say, hey, I'm still in the market. It's going up. I'm going up too. Maybe not as much as I would have with my high flying stocks, but I also won't go down that hard if the market crashes. So you're mitigating your risk, and that is critical to making money in the market. Make sure you mitigate your risk at all times, right? Do not let greed step in. Also, don't let fear step in. Fear's going to come in soon, right? And you're going to start thinking, gee, the market comes down to here. You're going to start thinking, I don't want to start buying leverage products. What if it goes down further? And the fear is going to start to tell you it is going to go down further. Just get out and take what you have and be happy. Well, you can do that. If you're going to get out and take what you have and be happy, get out right now and do it. You'll have a lot more, okay? Otherwise, stay in. That way, if the market goes up, you go up with it. But if the market goes down, you're going down with it, but you're going down slower. And if you're holding the SPYI, SPYI, which I made a video on that, and the QQQI just last week because I really like those index ETFs, you're going to go down slower than the market and you're going to make income while you're waiting for this market to move. Once you get to the bottom here, you're going to transition now. You're going to transition to a leverage product. And you need to know when to do that. And that's going to be up to your own market reading skills. When do I transition, right? You're going to use a moving average, the 200-day. You can use the 30-day moving average, the 10-week, the 30-week. Everybody has their own, right? The 1, 2, 3 reversal, pretty common too. I do incorporate that sometimes into my trading, depending on where we're at in the cycle and what I'm trying to do. But that's what you want to do. The low beta here comes down here. You're going to transition. Now, what happens after you transition? Well, I'm going to go back here and use this as an example. Well, you transition back in, right? Let's just say you came down with the SPY and you sold it, and now you bought SSO. Well, SSO, the market starts going up. You really don't want to do anything except for hold it. Don't sell cover calls. There's no reason to sell cover calls. It's going to cap your upside, right? This thing's going to start moving up fast. Sometimes recoveries are explosive. And if you sell a covered call right here and it explodes higher, well, you missed that whole capital gain just to get that couple of bucks on the premium. A lot of people like the premium, and it can trick you into feeling comfortable, thinking you have money coming in, but the real wealth is being sold to that person who bought that premium, right? Or paid you that premium. You're losing that wealth. You want to get that wealth. You bought this product down here for a reason, and you bought a leverage product. Say you bought the SSO, you bought a leverage product down here for a reason. So when this thing explodes, you're going to explode faster than the market. So do not sell cover calls against it. All right, that'll just hinder your movement up. Do not sell cash secured puts, right? That's going to greatly hinder the amount of money you're going to make on the up move, right? The most money you can make is just by buying that thing and riding it, okay? It's a really fast horse. You bought it for a reason. Now you're going to ride it. When it gets up to here, somewhere in this area, again, you're going to have your own parameters. If you're not going to follow mine, you can develop your own. When are you going to switch to a slow running horse? Somewhere in this area, right? You say, okay, you're going to have an indicator that says, okay, the easy money is made. I'm getting off my fast horse because now it's at risk of another reversal, right? Or some sort. I'm going to go back to a conservative play and get back into my normal portfolio and start riding it up again. So the bull market's going to carry everybody's portfolio higher, okay? Easy money starts to get made again. The fast money was made here. The easy money comes here. Now you get ready for another transition. I hope this helps you. I appreciate you tuning in. I'll talk to you soon.